Vicky is the first one. She's 75. She's asking about BRICS countries for reference. That is Brazil, Russia, India, China, and South Africa. These countries are going to gold instead of the U.S. dollar. Please address having a small portion invested in precious metals and how to do so. I'd love to hear your thoughts on this controversial topic, Shanna.
Yeah. So the first thing that comes to mind is we do have an investment in most of our asset allocation models, a defensive type of investment mutual fund that you can find there, and it does own precious metals. And it was one of the very first, if not the first, mutual fund that started to hold their metals physically when the law changed and enabled them to do so. So that's probably the easiest way. If you're going to get some precious metals, silver's probably the best. I'm not a huge fan of precious metals. I don't think that they're going to save you from a currency collapse or anything like that, because the government's just not going to allow you to use an alternative currency. So you'd probably be better off stocking up on some food and ammunition. Dan always used to say, my jar of peanut butter is going to be worth way more than your bar of gold, because what are you going to do? Go down to the store and shave off a few shavings to try to get what you want to get. And that's just not going to happen. So if you are insistent on getting precious metals, don't do it in an IRA, because you can't hold it physically. There are fees to buy it. There are holding fees. It doesn't pay dividends. So you have to sell it. The commissions can be pretty high in some cases. So there's a lot of drawbacks there. But if you want to include that in a diversified portfolio, you can. I would not do more than about 5% of your overall investable portfolio there and hold the metals physically.